Welcome, Julian. Julian is the co-founder of Relai, and short disclaimer, I'm sponsored by Relai. I'm very happy that Relai is a sponsor. And just the last couple of days were not easy as a Bitcoin investor. And I thought, hey, I have the guy in my network who knows probably a little bit more than I do, and let's ask him. So first of all, welcome, Julian, for being very quickly on the show. And my first question is, what's going on at the moment?
Thank you, Alan. I asked this myself as well. No, I mean, I've been into Bitcoin for 10 years now, or 11 years, and this is not the first time that this happens, and it's also not the last time. It will happen many times. What is going on is this is a really early stage technology and asset. It's not even 20 years old. It's very complex and also disruptive, like fundamentally disruptive for the most important technology that we know, which is money. And it's a very long-standing technology with a very long history. So and now that we have such a disruptive thing, this takes just time until people get to know it and how to deal with it, especially also investors. That's why it's just so volatile still. And if you look at the history of Bitcoin of 17 years now, there were these ups and downs. From in 2017 from 1K to 20K, and then in 2018 back to 4K. These double triples, but the hype cycles, but then also 80% drawdowns. Now we have a 50% drawdown. This just happens because it's a volatile asset.
To put it a bit more in perspective, so normally people, when I talk to people in crypto and Bitcoin, and I'm just an early adapter. I'm not very deep into it. I'm probably more on the side of the average person who is interested in the technology and what's going to happen and sees some potential there. Normally, over the last couple of years, it was always the money supply. M2 was like the cycle that was unbroken. Everything could go. You could bring back to that money cycle. It makes kind of sense, if you print more money and then it has just some correlation or causality with Bitcoin. But that one was broken now for the first time in a very long time. So why do you believe this specific case? Why doesn't it follow the specific patterns that people believe or try to believe in?
Mm-hmm. Yeah, many investors, especially also institutional investors in the last 2-3 years now, also with the BlackRock ETF, came in with this narrative. They came in with billions and billions invested in Bitcoin because they believe that it will do well in crisis times. And it seems that they were not very firm believers in the long-term, like digital gold narrative in the end, or store of value narrative, because as you said, fundamentally nothing has changed. Bitcoin is actually the hardest money and the best store of value asset that we ever had, right? It's there are only 21 million. It's super scarce, actually fixed even in many characteristics. It's better than gold fundamentally. But the problem is all these investors that came in, they don't really believe in that yet. They probably still see Bitcoin more as a speculation, more like maybe an early stage tech kind of startup or case. And so that's why we are also seeing many of them selling again after a year or two, because they don't really believe that it is actually an inflation hedge or a hedge against this money expansion. And so gold very nicely performed, because gold for hundreds or even thousands of years is known as and used by these investors as a hedge against inflation and monetary expansion, whereas Bitcoin is still, for most of these big investors that drive the market, it is still a speculative early stage tech asset and not really a digital gold asset. Fundamentally, long term, I think it will be the case that Bitcoin will perform very well and will probably even reach or exceed the market cap of gold, and will long term, let's talk in decades, right? It will have this role as a monetary expansion hedge. But for now, most of the market participants don't see it that way. So it will take time and education.
Short break from our podcast sponsor, Relai. I've been using Relai recently for my automatic Bitcoin savings plan. I invest 50 francs a week into Bitcoin via Relai. Why? Because Relai is the easiest way to buy Bitcoin here in Switzerland. You can buy it via bank transfer, credit card, or Apple Pay. And Relay is Bitcoin only, so no other coins. I got rid of all my other coins. I have Bitcoin only. And the most important thing is it's self-custody. You know, not your keys, not your coin. With Relay, you have your keys, so therefore these are your coins. Use the code Alan to get 10% discount on your fees. Discount code Alan, ALAN. You will find the link in the description. And what's very, very important, be very, very careful with your investments. It's your hard-earned money, so think about where you're going to invest, what you're going to invest, and how much you're going to invest. This is not financial advice, so be really careful. And now let's go back to the episode. And one of the favorite things I saw just recently was where you had like a Bitcoin maximalist talking to a gold maximalist, and I'm not sure if it was ZZ who brought like gold with him and gave
with
it,
Peter
and
Schiff.
to Peter Schiff, and gave it to Peter Schiff, where he was like, "Is this real or not?" Which was just a great move. But could you guys see that there was movement out from Bitcoin into gold, or your team, are you guys analyzing that, or do you see like movement going out into cash or into stocks? And what do you see right now? Is there again a flow back to Bitcoin, and where does the story go from here?
So we mostly have newcomer users, mostly retail users, like 100,000 active retail users, and then some affluent, some private clients that invest 6 or 7 digits, and also some businesses. Now they come to us to buy or sell Bitcoin. We don't really exactly know where the money goes when they buy Bitcoin. What I can talk about is the flows are mostly the users are mostly buying, actually. So it's like 80-20, even throughout high volatility like we've seen here, because the people that we have onboarded, they believe in Bitcoin long term as a store of value, and they don't really care about the short-term volatility. In fact, when we have a price drop that is very stark, like 5-6% in one day, or 10-15% in a week, and when it goes down, we see double, triple, quadruple the volumes.
So people buy the dip.
They buy the dip, and they set up savings plans, and they keep their savings plans running. They even increase their savings plans, and then they buy the dip, exactly. What we don't see in these periods of high downwards volatility is new clients. It's very hard to get new clients. Those we already have, though, they are buying, and what we then don't see is what they do with the money, whether they shift or not. I think most of these, because they are newcomers, it's not like they have a super diversified portfolio and they're swing trading or day trading back and forth. Actually, what they do is just they save long term and accumulate Bitcoin, and that's, I think, something that really makes sense. With the private and business clients, because we have custom relationship management with them, we had a very good relationship. We actually talked to them. What we are seeing is that those who understood Bitcoin, slowly but steadily on the long term, they position, that they create a Bitcoin position in their portfolio. And to do that, they often sell some of their gold, not all of it, but some of their gold, some of their real estate, some of their stocks, and they shift it slowly but steadily into Bitcoin and build a Bitcoin position that might be 1% of the portfolio now, and they target maybe 5% in the next few years. So it's more shifting from other assets that perform well, like AI stocks lately, right? Or real estate always performs well. Gold performed very well. So they see this current situation actually as a good opportunity to take some of the profits of like AI stocks like Nvidia or gold that performed very well the last few weeks, and put it into Bitcoin that actually now is in a dip situation. So I think this is quite a good idea.
And what obviously you don't know the future, but your team probably you guys think about it. What do you guys see? Do you think we reach? And again, 100% clear that you don't know the future. But do you guys expect that there will be like it will go further down? Do you see like indication that it kind of stabilized now on this around $65,000, or is there also a risk in your team where you see, hey, it might go even further down, and even better opportunities to buy some more?
There is always this risk. But that said, the last 5-6 months already saw a 50% drawdown from the all-time high in October of 125K to now almost down to 60K or 65K US dollars. This is already a remarkable dip, and a lot of like billions of these institutional investors, they were sold. So it is oversold. Well, if you look at technical indicators, Bitcoin is oversold. If you look at the fear and greed index, it is at an all-time low almost. Like there is the market sentiment that takes into account social media and then trading statistics and everything. It's like fear is really, really high, which is usually an indication of we hit the bottom. We see people buying the dip like crazy. We're probably not the only platform. So many people now, when they see the price drops, they keep buying, which stabilizes the price. We've seen the price relatively stable around mid-60s now for a few weeks. So that all indicates that we quite kind of have hit a bottom, but we never know. Yeah. So that's why a good idea is always to just fundamentally understand Bitcoin, make yourself an opinion of, do you think in 10 years this will be a good investment if I start now? And if the answer is yes, maybe just start small with a regular weekly or monthly savings plan, and then you are happy when it goes down because it means you buy a little bit more, it's cheaper. And if it goes up, you're also happy because you have some. And so that's usually what I think is a good idea without giving any financial advice.
One, final question from my side. I just made a post today that, for me, the fundamentals are still the same, and especially also, with Bitcoin, it's established, and I hope that more payments will go through Bitcoin. I think this will help also a little bit more than when people can use it, that I can store value and pay things. That would be fantastic. And then I had some discussions with people about quantum resistance. And in the past, I was always on the side like, okay, you know what, quantum resistance on Bitcoin is not a big problem. Why? Because if the consensus is here, we can just upgrade it, no problem. And I'm more afraid for my 6-digit code on my banking account. But recently, the discussions moved a bit more in a sophisticated direction, where people, and I'm not a specialist in it, but I'm just getting all this information for me to make my opinion. Some of them say, you know what, the real problem is that especially these passive accounts, like Satoshi's account, they can't upgrade to the quantum resistance, and that's like one of the main problems, which is kind of also a trust issue. How do you guys see it? With the quantum resistance, where people are with the fear, and they're like, hey, this might be a potential risk.
Yeah, it's true. It's a good point, and it's great that this discussion is already now very active, even though I think quantum computing in this on this level that is needed to break the cryptography and the security of Bitcoin is still far away. I think from my perspective, I'm also not an expert, but looking at all the experts' opinion in the industry, it's like 10 years away at least, probably more. One number I can share is like we are now at like 4,000 to 5,000 qubits, and we would need millions of qubits to crack the Bitcoin security. So we're far away. That's number one. Number two, there will be an upgrade. Already in the next few years. It's already in the works now. There are already proposals. So there will just be an update of the Bitcoin network, and then people can move their their Bitcoin from their old accounts, old addresses, to the new ones, which will be quantum resistant. So I think this, let's say the active side will be relatively smooth. Now, the passive side that you mentioned is true. There needs to be more research needs to be done, because potentially there are, I think it's 2 or 3 million Bitcoin that haven't been touched or moved for a long time, and they still sit on these old addresses that could potentially, and including the 1 million of Satoshi Nakamoto, the founder of Bitcoin, that hasn't moved this wallet in 15, 16 years, they could be vulnerable. So it will also take a lot of time and effort still, even with quantum computing, to hack these, but it could be possible to kind of hack these. And then what happens to these coins? Either the hackers will keep the coins and then nothing really will change, at least not fundamentally. Maybe there will be a fear that again brings volatility to the market, that maybe they will be sold, right? Or the hackers actually throw all of them on the market, and then it actually will create a great dip. The market will need to absorb that. There will be buyers, but of course there will be a huge dip. I think short term, on the mid to long term though, this will just be absorbed. Even today, I mean, we have a daily 50 billion plus trading volume. We have already. There was this one big trade where I think more than 10,000 Bitcoins in one trade were just sold in one day, and it didn't really move the market. Every quarter, hundreds of thousands, some quarters, hundreds of thousands of coins are being sold, and there's a dip, but the market is very rational, very mature already. So thinking in 10 years, this will even be more the case. So I think it's definitely nothing that will break the Bitcoin system or anything. It will shake up the market and bring in short-term volatility for sure, but long-term, again, I would see this even then as a buying opportunity, and I don't think it will be the end of Bitcoin or something.
Right, that makes a lot of sense. Thank you very much for taking time. And after talking to you, my fear index went down, so I'm very happy about that. One last question: when I look at Michael Saylor, when he posts his new buyings, that guy is always buying way too expensive. First, he should buy it through Relai, and second is, where does this guy buy his Bitcoin? Is he buying it not on the marketplaces, or why does he pay so much more than everybody else?
Well, he just pays the market price, and he doesn't care. He just raises money as much as he can and invests it in Bitcoin, and he doesn't care if he does it at 60K, 70, 80, 90, 100K, 100. He even bought the top at 125K. He just buys every week, and he doesn't care. I think he buys on Coinbase, but also on OTC desks, so he doesn't move the market too much, and he holds them on Coinbase, that's for sure, like BlackRock as well. The big guys all hold them on Coinbase, which is another story. But I think Michael Saylor, look, his vision, his Bitcoin will be a multi-million, like 10 million plus per coin. So he doesn't care when he buys. He will buy at 100K, at the 200K, or 300K. He doesn't really care about the price. He just wants to accumulate as many as possible, and he already has 750,000. He will definitely get more than a million, which is like which is significant. I think 5% of the whole Bitcoin supply, which is crazy if you think about it.
Yeah, it's crazy. It's just every time he announces this, he's like 2,000-3,000 above where you can buy it on Relai. So I just wondered, probably he's just buying it off market. That's just a little bit delayed over time.
The premium.
Yeah. Or just delayed a couple of days, something like that.
Well.
So thank you very, very much for taking the time. And if people want to try Relai, check it out, relai.app, and use the code Alan. And thank you very much for jumping on the call very quickly. Bye, Julian.
Thank you. Thank you so much, Alan. Cheers.